All right, thank you for joining us again today. Today we're going to look at a portfolio income view on my investment account here. Basically, we're going to be looking at dividends that come into the account, the frequency, the dollar amount. I've put together what my Canadian margin account looks like right now. Yeah, it says cash is negative 57,000 because we borrowed against the value of the securities. But majority of these will pay a dividend. It's not exactly how it looked a few months ago before I took some profits. We've actually started gambling a bit more, but there's a few non-dividend payers. But I don't want to focus too much on what's in here now. But what you'll see is the ZWE, BMO Europe High Dividend ETF. You got a few utilities here with Algonquin and AltaGas, Enbridge and Pembina Pipeline right here. We got a couple of banks, Royal and TD. We paired some positions when the markets were high because you want to be prudent. But what we'll do is now go into, that's probably the wrong account. This is our margin account. So outside of the RRSP, this up top just tells us any upcoming events. We've got a Scotiabank dividend, Pembina Pipeline, Algonquin, and AltaGas. We're seeing the record date here as well as when these payments are coming in. Today is October 7th. So what you're going to see is a nice little dividend stream. Scotiabank, we had sold all of it and we bought back a little bit as the market pulled back. So that's a quarterly $63 dividend there. For Pembina Pipeline next, this one actually pays monthly. So we got 125 units. We had about 400 before, so this one's $26 a month. AltaGas, the next line, pays $12 a month, and I believe Algonquin is monthly as well. But this is basically going to tell us what income stream we've been having in the last 12 months. What you'll see, the European High Dividend just paid a few days ago, October 4th, $70. That's 70 times 12. That's about $840 in a year. So not bad when you've built up your account. So here was the Suncor dividend, $147, almost $150. Monthly, that's $50. So this is again a quarterly dividend. The interest for some reason doesn't show. This is a margin account, so I'm being charged interest, but I can write it off on my taxes. As my dividend yield, I'd probably say is higher than what I'm paying in interest. It's a different strategy I have. We'll use another video to explain other strategies, but you can kind of see October 4th was that BMO high dividend, and there it is September 2nd. Same investment on its monthly dividend on that line. So take a note of this. Enbridge, we only have 80 shares. Canadian dividend, the tax treatment is amazing on these. $66.80, but my quantity here is 80. Earlier in the year, you'll see we had 500 units, and basically it was a $400 quarterly dividend, right? So here's the Royal Bank dividend. This is after we sold our positions. What you're going to see is, as we're looking at October, if we go into the summer, July, June, May, we have all these guys that were paying more. And actually what you can see is this is when we had our 400 Enbridge. We're down to 80 shares now, but that was a $300 dividend. $330, so not bad. Royal Bank, we had more of, had this commercial REIT, which paid a monthly dividend, 1,500 shares, $75 a month. So, I mean, you're looking at, $74 a month there. Close to $900 in a year. So you got some pretty heavy dividend payers. What I did was sell a little bit off to, if you ever borrow money, you want to pay it back as you're taking profits, and then we'll see if there's a market pullback, I'll start accelerating some positions again. There's when we had, I think we're at 125 Pembina. We used to have 300. So there you go, the $60 a month. I was very dividend heavy. TransCanada, TC Energy, TD Bank, you're seeing some of these bigger quarterly dividends. They're in a span of 2 days, April 28th, April 30th, close to $600 in dividends, right? Those were quarterly, not monthly, but what you're starting to get the gist of it now. This is when I probably had the peak value on the account. You're starting to see a lot of it's repeat business. There's when we had the 500 shares of Enbridge as well. So That's a pretty healthy quarterly dividend. It's risky, but you're starting to see a lot of the cash. I think in the year this thing's generated, well, in 3/4 of a year, 9 months, about $6,000 in dividends. We were generating about $500 a month, and I think I was being charged interest of like 300. So not only that was actually helpful, but we had capital gains. So as you go into January, you're seeing a lot of these dividend payers. We'll go to the other tab. This is our RSP account. A few less positions. You'll see some US dollar positions like Bank of America as well that just paid on September 24th. So now this is the funny thing to look at. It's 150 shares. It's a US dividend, but they paid it in Canadian dollars because they've converted it. This is one of the old RSP accounts where you still have your American positions in the Canadian side of the account. You're now allowed to open a US dollar RRSP. That way you don't have to worry about exchange rate working against you. But I was a little less concerned about that in this account. You're going to see some of the same positions. So RioCan was in there, the high dividend ETF. We've got the covered calls, banks for Canada, smaller positions than I used to have. A couple of my banks. Even if you don't get the tax treatment inside the RSP, if you have a good investment, just keep it. Where we have our, these are some of the really risky plays. Don't spend too much time on them. But CNQ here as well, 140 in the quarter. You're seeing some really good stuff. There's Visa, very tiny dividend, but it's in there for capital gains. You always want to offset some dividends with some growth stocks as well. So now we're going back to April. I didn't do too much maneuvering in this account. Oh, that's back when we had Fortis as well. So Canadian dividend, it breaks it down. Like I said, as long as you have a strategy, that's the most important thing. But I just wanted people to realize, hey, what does it look like when these dividends come? They actually build up your cash balance in your account as we switch back to our non-registered account. Even in December down here, one of our mutual funds actually paid a capital gains dividend here. So that's not a normal $2,000 dividend. That's end of year distribution. Again, that's a different topic for another day. But the biggest takeaway here is when on this non-registered account, we were generating about $500 a month. That's pretty good. If I can get my account 10 times bigger, that could be $5,000 a month, $60,000 in a year. Is it possible? Yeah, if you keep adding to your investment portfolio over time. So that's the lesson here today. Dividends in action. What you don't see are some of those. We hold Google stock. We hold Amazon. They're not paying dividends. They've still done really well. But those ones are for the capital gains and probably just as important, but this is where you actually take income from your investments. And if I wanted to send this to my checking account, I could. I just reinvest it. I like to let my cash build up and look for an opportunity. But also a lot of the retired folks out there, they use that $500 a month as spending money, and it's taxed very nicely. So I think there's a big lesson to be learned here on the power of dividends and what it means, because where does it come from? It's from the profits of these companies. Even in years these companies lose money, they paid their dividends. Some of these companies have a 100-year history. Some maybe not as much, and some did cut during the pandemic. But if you talk about passive income, all you do is you own it, you let that money hit your account, and then reap the rewards. I think it's that simple and very powerful. So again, we go back to our basic view. This portfolio is not diversified. It's heavy in energy and banks because my tech names are in the US dollar account. The RSP showed the other US names. We got a few mutual funds, so don't focus too much on that. I can probably pull out an old statement just to show what it used to look like at the peak of it before we took a healthy profit. I thought markets would come down. They did briefly, but they shot even higher. I'm not worried because I've had a good enough year so far, rates of return wise, and I actually had some big capital expenses at home, so I used that money to pay for my new vehicle because, hey, why not use the profits for something? It didn't take anything out of my paycheck. Like I said, have a strategy I've always preferred income investing. I am not keeping pace with the Wall Street bets, guys. I don't have any Tesla. I could have made more with that stuff, but guess what? I'm okay with this. I don't need to make the most out there because it's hard to do it consistently. I'm willing to give up some future returns to get this heavy dividend income portfolio. And even when I get the tax slip, this will show I made income. So if I'm applying for a mortgage, all this income will be added to my salary too. So it actually helps me buy an investment property. There's something we didn't talk about yet. Again, we can explore that further. But so I hope you all have enjoyed this, taken a little bit of knowledge out of this, and can incorporate some of these strategies. And as we get comments in the future, we can start talking about more strategies and what to do, leveraging or not. But I'd say leverage your knowledge. That's my biggest takeaway. So thank you, everyone. Have a great day, and we'll talk to you again.